All right. Hello, everyone, and welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's going on in these crazy markets and how we're trading them. Today is Tuesday, July 9th. The S&P enters the record books for its fourth straight consecutive day. All eyes are on Fed Chair Jerome Powell's testimony. Is Intel the next chip winner? NVDA gets an upgrade. Plus, we'll take a look at our open positions and see what's going on there. As you can see, there's a lot to talk about, so let's go ahead and get started. If this is your first time here, my name is Mark Hedge. Mark Hodge. Gosh, if I can't say my last name, we're not off to the best start. But my name is Mark Hodge. I'm head coach at Rockwell Trading, and today I am running the show solo. So we could call it Coffee with Mark. Marcus is feeling a little bit under the weather, and hopefully he'll be back here with me tomorrow, if not Thursday, but hopefully he's feeling better. And let's just dive right in, look at the charts, and see what's going on. I have the S&P 500 open and the S&P 500 sitting at new record highs. Again, look at this. I mean, just after getting outside of this range here that we had mid to late June, new record on Tuesday of last week, going into that short session on Wednesday. Short trading session, but making new records. Markets were closed on Thursday, and then on Friday, new records again. A big, nice up week last week, and then yesterday, we weren't moving anywhere, but it didn't matter. S&P made new record highs again, and today we're sitting at new record highs. If we look at a 5-minute chart here, we can see what this looks like. There's a big rally for 3 days straight around the 4th of July holiday. And then yesterday, we have that gap higher, a little bit of a push to the upside, and then a fill of that gap, a session low established, a little bit of a rally getting back up to the open, testing the low of the day, and then getting back towards that open to finish the day positive. Kind of a similar situation today so far, gap higher, rally to new record highs, and then an attempt to fill this gap, not quite filling it like we did see yesterday, and then another move towards these highs, pulling back again below today's open, but still above the close yesterday. So the S&P 500 up 0.2%. The Dow having the opposite move, down 0.2%. The NASDAQ is sitting at new records, just like the S&P. Yesterday was the 35th record high close for the S&P 500. There were 25 new records made at the end of the day for the NASDAQ. So far, quite a move higher, but we see that there's a little movement taking place. And this movement has a lot to do with Fed Chair Jerome Powell, because he is testifying before the Senate Banking Committee. If we look at the economic calendar in PowerX Optimizer, we see here that 7 a.m. Pacific time. So on the West Coast, 30 minutes after the U.S. session opened, it's 10 a.m. For the East Coast. And he is currently testifying. Now, there's a prepared statement that is shared, and he makes that statement, and then he gets into some Q&A. Right now, there's Q&A underway, and we see here that the S&P 500, an article from CNBC.com, the S&P 500 rises to a record level as Powell highlights risk of leaving rates high for too long. And here we see a quote that he said, reducing policy restraint too late or too little could unduly weaken economic activity and employment. He said more good data would strengthen our confidence that inflation is moving sustainably toward 2%. And this is really a positive. I mean, it's not necessarily new news, but it does seem like the shift towards a rate hike discussion. Of course, he's always going to say it's data dependent, and there's still a lot of data before we have the next meeting and the September meeting, which is where most traders right now expect the Fed to cut. But we could take a look at the CME Fed Watch tool and see where the probabilities stand. And let's look at probabilities here. We see that right now a 78.65% that there will be a cut at the September meeting. Still expected. 95% chance rates will stay the same at the July meeting. Just showing that traders believe the Fed needs to see more data before they actually cut. And that's essentially what Powell's saying anyway, right? So no cut in July. That's almost a foregone conclusion. And then it's just a matter of, will we see a cut in September, or will it get pushed back to November or December, or no cut at all, right? Right now, the market is pricing in a cut for September and also December. Maybe two cuts is a little bit optimistic, but it definitely seems like one cut at a minimum is on the table based on probabilities and based on what the Fed's saying, because you'll see that before the September cut, there will be CPI data coming out this week. So more CPI data in July, more CPI data in August, more CPI data in September. So a lot of inflation data and core PCE as well. A lot of inflation data before the September meeting. You'll also have a jobs report in August, jobs report in September. And so there is a lot of data that could sway the Fed and lead them to cut. Of course, if it turns out that the data isn't ideal and that inflation is persistent, or maybe the jobs market's getting stronger and the Fed decides to hold off there, I mean, that's yet to be seen. So a lot of data before these meetings that are coming up. But right now, Fed funds futures are pointing to two cuts, one in September, one in December. And Powell seems to be showing that he wants to cut, and doing it too late or too little could be a problem for the economy. So now it seems like they're shifting a little bit more to the economic situation rather than the inflation situation, feeling that the inflation situation is a little bit better at this point in time. So going back to the markets here, we could actually, let's take a look at the heat map, and we could see where these records are distributed. And there really isn't a lot of movement, right? We see some green. NVIDIA, another big move from NVIDIA after being down a little bit, rebounding nicely, up 3% today. Tesla seeing a little bit of a bounce, up 1%. Meta up 1%. Google up 0.75%. So Microsoft down a little, Apple flat. Some of the bigger names seeing some gains in banks and financial services, some losses in oil and gas, but it really looks like the overall market right now is mixed. We can take a look at NVIDIA though. NVIDIA, look at this. So there was that split day and then some follow through, pulling back in the second half of June and kind of chopping around. On Friday, there was a down day, getting back to eliminating Friday's losses yesterday, and then today a little more follow through. Right now, NVIDIA is up almost 3%, and this helped out by KeyBank hiking its price target to 180, seeing 180 as a target for NVIDIA, which based on yesterday's close would represent a 40% move. We'll see if that analyst has it right, and whether or not it happens sooner or doesn't happen at all sometime during the next year. Another mover here, we got to take a look at Intel. I mean, Intel kind of looked like it was just dead, and we saw this range here between 30 and 32 after a pretty disheartening slide from these highs, right? End of the year, it was trading above $50 a share, a 40% move lower. And yesterday and Friday, just kind of taking off. On Friday, was up 2.5%. Yesterday, it was up 6%. So a pretty impressive move. Today, it opened up at $35 a share. So from Thursday's close to today's open, that's a 12% gain, which is huge for Intel. It's pulled back some, so still up 9% from Thursday's close to today. So erasing today's gains right now, just a little bit higher, but an impressive move. It looks like some people are getting interested in Intel again. Intel's been just a weak performer when we look at chips. Kind of missing an opportunity there. AMD looking stronger. Out of the here, let's actually go back to Trading View. So the Philadelphia Semiconductor Index (SOX), the second worst performer, and you see that the semiconductors in general have just been doing great, right? So we'll see if this rally in Intel has some legs, or if it was a little short-term hype and profit taking, and if that move just comes to a standstill. BP, we have to take a look at BP. So British Petroleum, look at this, a big move down. British Petroleum down 4%. Now, this came really after two things here, and one was actually more of a right. This is just a bunch of garbage. Let's here we go. This is more relevant. So they announced they have earnings coming up, but they warned about some weakness here. They announced that they expect a write down between $1 billion and $2 billion after a tax assessment impairment and one-off contract provision. So having to write down $2 billion potentially. And then they also shared that they're seeing significantly lower realized refining margins. And investors didn't really like that. We see here, looking at the chart, big gap down. They release earnings in 20 days here. So this was a warning prior to earnings. Their earnings report is on July 30th. And a pretty decent drop. And this seemed to carry over a little bit into some oil and gas plays, wondering if they're alone in this assessment and what they've shared, or if it's something that we'll see from other oil and gas companies. Crude oil really just kind of flat for the day, not moving a whole lot, so you can't really contribute that to a rise in crude oil, or in this case, most likely a drop in crude oil. But that's where we're at. So BP also popping up, or we were looking at this morning in our mastermind group and wondering if this would make a decent play for the wheel strategy. And this is where I do think that BP looks decent. We could run through the numbers here. It pays a 4.7% dividend yield, which is a nice dividend yield. Not a primary consideration for me when I'm taking wheel trades, but it's nice to get paid if I'm in a trade and waiting to sell calls. PE ratio of 11.44 is nice as well. If we look at the income statement quarterly, there are 5 quarters of profitability. And if we look at the yearly net income, they were down in 2020, which would be expected when crude oil went negative and during the pandemic. 2022, they were also lower. So only 3 out of the last 5 years, they were profitable. That's a little bit of a red flag when I'm trading the wheel strategy. So here we're seeing a drop right to this low close indicator, and there's some decent premium here, but we're trading right around that strike. So after the initial drop, not a lot of volatility here in this one, and that to me doesn't have me too excited in this. Now, interestingly enough, if I look at the asset correlation tool here, I was looking at this compared to Halliburton, and it is interesting to see that here we have Halliburton, the correlation tool has a 0.57 correlation to BP. Anything above zero point 0.5 would be correlated in my book. Anything above 0.65 would be a hard no, because I don't want to trade positions that are too correlated, right? If I'm trying to manage 5 to 6 wheel positions, then I want to make sure that the portfolio that I'm managing for the wheel strategy isn't heavily correlated in one sector, because if that sector is underperforming, the majority of the portfolio is underperforming, right? So I like to see that there's a little balance there. We do see that I added some other oil and gas companies just to kind of see what the correlation looks like. And this is more in line with what I would expect with like Halliburton. We see Oxy and Halliburton a zero point 0.7 correlation. If we look at Chevron, it's 0.64. If we look at Exxon, it's 0.67. It's a little surprising that BP isn't as correlated to Halliburton or these other oil and gas plays. But I guess that's the way it goes with British Petroleum. Nonetheless, between that and not having a whole lot of volatility, and I think having better oil and gas plays out there, I am not interested in this one. But it was decent to consider as a great looking wheel chart. And this gap down to this support level looked attractive, but not one I decided to trade today. Well, with that said, we might as well take a look at other open wheel positions. We could look at CSAQ, and CSAQ right now all over the place after that nice 2-day rally, pulling back some today, starting the day right around where we finished yesterday, down 2.8% right now. So trading at 1509. We did that partial rescue at 1550, picked up some shares. ISIL puts at $15 was a sign on this pullback. And right now, I'm looking for this to make a decent move higher, which is going to take some time, but I'm hoping gets sparked, that a rally gets sparked by a Fed cut. And that's what I'm hoping for, because there's definitely some worry or impact when yields are higher, and how it relates to solar. So yields right now, 10-year yields up 1%, and that's putting a little pressure on CSIQ. Another position that I am in would be UPS. UPS, traders trying to figure out, what do we do with UPS, and is this an attractive area to buy or sell? Right now, just a tight range between 134 and 139, not moving a whole lot at all. UPS does have earnings coming out July 23rd. So it'll be interesting to see if there's a similar move to the earnings that we saw in FedEx. FedEx, just a great reaction to earnings. They did show that they had seen some positive movement because of cost cutting that they've done. They also were able to post a profit and better than expected revenue. So it was the first revenue beat in multiple quarters. And they also announced a buyback, a stock buyback. Would love to see UPS do the same and see this type of move in UPS. But right now, FedEx definitely outperforming, trading at near highs of the year, and UPS trading near lows of the year, looking to see if that support level holds and if it attracts buyers or not. Those are the, there's also Halliburton. Halliburton, the other wheel trade that I'm in right now, trading around $33 a share, trading right around this lowest close, and Halliburton's kind of in this 33, 35 range. I'm in at 34.50, so is Marcus. So right now, trading a little bit lower. I'm not able to sell calls, but I am looking to sell calls at 34.50 when I can get 30% annualized or better. I could look at the calculator here, look at Halliburton. And if I'm looking at this Friday's expiration, I could get 30% plus at the 33.50, actually 42%. If I look at next week's expiration, which I think it's a little early to be looking at next week's expiration because there's a lot coming out this week. But here we see that for next week's expiration, 32% annualized is possible at the 34 strike. So we're not too far away, but definitely would like to see Halliburton pop a little bit so I could sell calls at the 34.50 on half of my position for this Friday or next. That 30% target is important to me, so I'm holding off. It's not that far away, but right now, not able to do that. Let's talk WTF trades. WTF, no new signals, no exits. Right now, I am in, out of these 9 positions, I'm in 7. So AZN, I did not take. I did take DHR. DHR just kind of hanging out around the entry point. Nothing to do with this one. I took Disney. Disney pulling back a little bit, but no exit yet. I did not take KDP. I might consider an open below entry on this one if it continues to pull back. Right now, I'm holding off. So I'm not in KDP. I did trade Merck, and Merck dipped a little bit today, but came right back to the open. Nothing to do with Merck right now. Moderna, mRNA, I traded, and after pulling back a little bit, just kind of flat right around this 116 mark, trading at 115.72 right now. Nothing to do with Moderna, waiting for an exit. PCAR, after an entry, a little bit up today, but just kind of trading a little bit around this 200-day moving average. Not a whole lot of movement. RTX is up a little bit today, also trading right in this range right after the entry. So the WTF trades are kind of behaving like the overall market, and that is right now flat. Not a lot of excitement, not a lot of movement, and it's clear that investors are waiting for something to happen, right? Is it going to be Fed Chair Jerome Powell and comments today with his testimony? Will it be tomorrow with testimony in front of the House? Will it be CPI data that moves the market? Will it be PPI data that moves the market? Or will it be earnings where we have some big names reporting on Thursday, but we get the official or unofficial kickoff actually on Friday of our next earnings season with big banks reporting? A lot going on this week. So I'm excited, looking for opportunities and ready to take more trades, especially on the wheel side. Have some room there. And I would like to see a nice pop to get out of some WTF trades, but right now sitting tight. With that said, we have a friendly competition between Marcus and I, and that is telling a trader joke or just a dad joke in general. And Marcus kicked my butt yesterday based on the comments, and I think everybody has for everybody that commented, I don't know what's wrong with your sense of humor. And I think that this joke is appropriate today. Why would I rather tell jokes to ducks than traders, especially after the feedback yesterday? It's because ducks always quack up. All right. I'll leave it at that. Like I said, hopefully Marcus will be joining me tomorrow, if not Thursday, but he's feeling under the weather. So would love to have him back. But in the meantime, hope he feels better and gets well soon. For those of you who joined us today, thank you for watching. Thank you for your likes and thumbs up. And thank you for subscribing to the channel. If you haven't done so, please do it, so you get notified when we do future videos. That's going to do it for today's Coffee with Marcus and Mark. Until tomorrow, happy trading, everybody.